So I'm going to share my screen. Let's take a look at this together. So, and you're going to be assessed that $3,000 penalty from the IRS for like 4.5 years. And you decided to wait till 60. That they're actually showing you guaranteed versus hypothetical. But if you want to wait and get a higher payout, wait this long. Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today, we're going to be talking about how much does a $500,000 annuity pay per month. So if you want an annuity and you're looking for the highest payout, then you've come to the right spot. Especially if you are wanting to research this yourself, go to my website, johnstevenson.com, and you'll be able to pull up all these numbers for yourself without having to talk to me. So that is nice, especially when you want to research on your own without feeling like you're being sold a product that's paying the advisor a huge commission and not paying you as much, okay? That's really important. So I'm going to share my screen and I'm going to show you everything that is available to you right now with a $500,000 annuity, just some options, some things to think about, and then you can kind of determine for yourself if that's something that you want. So again, I like to show everything, okay? Some of these pay high commissions, some of them pay very low commissions. But in my opinion, you should still see everything that's available so you can make the best decision for yourself. And of course, if you're looking to purchase an annuity, I'd love to help. Okay, there is a link below this video. It goes directly to my calendar and we can get on a Zoom call and I'll show you everything that's available and I'll answer your questions. Otherwise, go to my website, check out the annuities, and then you can book a call there as well. So I'm happy to help. Don't want to try to push or sell you anything. Okay, I just want you to see what is there and then you can decide for yourself. All right. So I'm going to share my screen. Let's take a look at this together. All right, so the state of Washington, I put in someone who is 55, and let me just make this joint. Okay, so joint income, they're both 55, and it's $500,000. Now, just fair warning, 55 is young. You may not think so, but it's young, okay? And when you're taking income that early, they're not going to give you as much because they're going to be on the hook for a long time, especially if you're married. Statistics show that married couples live a long time. And so anyways, I'm going to just show you some examples, but I just want to give you that warning. Also, if this is an annuity, okay, whether it's coming from a 401k or an IRA, or if it's just non-qualified funds, because it's an annuity, it's a tax deferred product. And because of that, you're going to get a 10% tax penalty if you take it before 59 and a half. Okay, so I'm going to show you though, you can still take lifetime income early, but you're going to be assessed that tax penalty from the IRS if you do so. So I would recommend waiting, and I'm going to show you why. Okay, so let's say you just got money in a 401k, or in an IRA, or you just got cash, and you're thinking, hey, I want to put this in. I want to get as much income as possible now or later. What does it look like? Okay, so you're 55, your spouse is 55. Here it is. It's $30,000 per year for the rest of your life, starting at 55. So, and you're going to be assessed that $3,000 penalty from the IRS for like 4.5 years. Okay. So anyways, I would not do it. I would wait, but at least you can kind of see what it would look like. Now, if you're 59 and you put the same money in, you're going to get a higher payout. Again, you got to check out my calculator so you can see exactly what that would be for you. All right. Let's just say you put 500 grand in and you decided to wait till 60. Okay, you're like, I'm not going to retire till 60, but I want to take advantage of rates right now so I can have high guaranteed income for myself later on. Well, it's 47 grand 606 from ClearSpring. Pretty good. You got Corebridge, you got Delaware, you got Athene and Nationwide and tons of other companies. But if you're looking for the highest payout, yeah, ClearSpring is great. And I'll show you how they're doing it. So, and this is very similar, and we're looking at income riders, by the way. Income riders are attached to fixed index annuities, and they typically pay out the highest annual amounts. So you could buy a SPIA or a DIA, and those will give you lifetime payouts as well. They're just not as high, and they're best for people that want to do like a period certain, like a 10, 20, 30. Those are great for that. But if you're looking for highest annual, then I would recommend sticking with the income rider. All right, so let's look at how this breaks down. You'll notice that they're actually showing you guaranteed versus hypothetical. The guaranteed side shows if there's no growth in the S&P 500, you're still getting the income. Your account balance is going to run out by the time you're 69 or 70. Okay, that's the worst case scenario. And you'll see the rider charges. Here's the income rider charges right here. Okay, they're not hiding that. But the rider charges is giving you a lot. Okay, they're giving you like 8% upfront on this benefit base, plus 8% every year compounded. So if you let that sit and grow for 5 years, it's going to be $793 guaranteed, multiplied by 6%, giving you 47 grand a year. Okay, pretty good. So if we look at the hypothetical, the only difference you'll notice that the account balance might last till you're 77. That's a lot longer, and it probably will last that long just because you're probably going to get growth in the index unless the S&P has a long recession. But either way, the income is guaranteed. And if you take it out to your 95, you take out 1.7 million. Okay, if you live longer, you're going to take out more. In under 10 years, you're going to live, you're going to live a long time, 105, right? But if you do, you're going to take out another like $470,000 in income. So it's pretty good. And this is joint life, okay? So if you take a single life, it'll be a little bit more income, not much, but it'll be a little bit more. But if you die and you're married, your spouse is not going to get anything. They're not going to get any income. They'll get a refund of whatever's left in here, but that's only if you die early, okay? There's always, you see over here, there's a refund, there's a death benefit of the account balance, okay? So you're leveraging your money for a high pension. That's what you're doing. But if you die early, yes, your beneficiaries will get the lump sum. I would just recommend if you're married to do a joint payout, okay? But that's up to you. So let's go back here and say, okay, well, what if I want to take this till 62? Because I'm going to take my Social Security at 62, I'm going to retire at 62, therefore I'm going to let this grow till 62. Well, what a difference. It's like 10 grand more a year. That's just because you let it sit for 2 more years. Because you let it sit for two more years, you let that benefit base earn 8% compounded another 2 years. See, look, grew from 793 to 925, and you got a higher withdrawal rate. There you go, 57 grand. It's that simple. That's how it works. So then we'll go back and say, well, this is pretty good. I want to wait a little bit longer. I want to wait till 65 because I'm going to start Medicare at that age. Okay. It's just easier. We're going to get higher Social Security. We're just going to let this sit for longer. Okay. Well, the power of deferral for 10 years is going to be obviously on your side. Wow. $74,000. Yep. That's contractual, and that's because you gave it to the company for 10 years, and they grew it. They grew it 8% every year. That's why you got 1.165 multiplied by 6.4, giving you 74 grand. Okay, that's just because you let it sit there longer. You can see if you take it at 60, it's 793 times 6 gives you this. It's still good, but if you want to wait and get a higher payout, wait this long. And here's the nice thing about this: you do not have to decide you're going to take income at 60 or 61 or 65 when you buy the annuity. Okay. You're going to decide whenever you decide to take income. And then when you decide, you already know what it's going to be, okay? These are very flexible. They allow you to take income whenever you want, okay? So it's very important for you to know that, because when you buy an annuity, you're setting yourself up for success later. You're locking in those rates. And of course, you're going to have high lifetime income later on, depending on the date you decide to activate income. And when you do decide to activate income, I'll send you paperwork and you'll fill it out. It's like 4 pages, and you'll put in your ACH, and then they'll start dropping the money in your account. So again, if you want to look at annuities, there is a link below this video. Okay. And you can, we'll get in there and we'll talk about what you're looking for. Otherwise, go to my website and check out the annuities for yourself, and you can book a call there too. All right. Let me go back to this real quick. Okay. I just wanted to show you, let's take a look here. 74 grand. I'm just curious now, just for fun. 67 is full retirement age for a lot of us for Social Security. Look at that, $89,000. So let's say you're like, all right, I want maximum Social Security and I want maximum out of this contract. Well, you just let it grow a little bit longer. Okay, pretty good. Pretty good, just saying. So let me illustrate that one more time. Let's go down here. Yeah, 1.359, guaranteed, okay? Times 6.55 gives you 89 grand a year for the rest of your life. And again, they show you, like, this is the downside. The downside is if there's no growth, absolutely no growth in the S&P 500 over 12 years, you're going to go down because your rider charge is here. But remember, your rider charge is giving you that 8% guaranteed every year. So in my opinion, it's worth it. Just my opinion. So anyways, if you go up here or go down here, you'll see, let's see here. Yeah, almost $2.6 million by the time you're 95. And that's if you wait till 67. So anyways, you can do whatever you want. I just wanted to kind of show you how this works, okay? The earlier you start, the better. But a lot of us can't do that. A lot of us can't access our money until we're 60 or 59 and a half, and that's fine too, okay? We can still, and you'll look at my annuity calculators, you'll see for yourself which ones are the highest payout for yourself. And then when you feel comfortable, then you can reach out and we can talk about getting an annuity set up for you. So anyways, I try to be super transparent. I want you to see what's available without trying to make you feel like you're being sold something. Obviously, I make commissions on these. Okay, I make money, right? That's how I make my money. But at the same time, I want you to see everything that's available. You're already looking, right? So you might as well see everything that's available. And then when you're comfortable, then reach out to the advisor, okay? It's that simple. And then we can set it up. We'll submit an application with the carrier. It takes about 5 to 7 days to get approved. Once they get approved, they'll send transfer paperwork over. If it's an IRA, just custodian transfer. It's that simple. If it's a 401k, it's an extra step in the process, but that's still easy too. So otherwise, non-qualified funds, you'll just wire the funds or send a check. So then once they get the money, they will issue the contract. They will send it to you. And then you've got to set up for guaranteed contractual income and guaranteed growth for that income. So I hope this helps. Just trying to be as transparent, trying to give you as much value as I possibly can. And I do appreciate you watching the channel. I appreciate you watching this video. If you do like it, make sure you click the like button and subscribe and share. And make sure if you have a question, don't be shy, okay? Comment below and I'll answer it. So happy to help. So thank you so much for watching, and we'll see you soon. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.